Hi, I'm Peter Rose, founder of Longwood Currency Trading. Not trading is still trading. I want to discuss that because I've had several conversations with people that feel that they've got to be on the boards all day long. They've got to trade every day, multiple times a day in order to make any money. And that's false. The problem there is not making any money. Well, what do you consider not making any money? The amount of money that you make has got to be some percentage of the bank that you have on a per transaction basis. That's the way that it's got to be figured out. Otherwise, you're delusional as far as what you're going to be capable of doing or what is capable of being done. And it is very difficult for me to unwind somebody from that sort of thought process. I'm out on the outside deck today because it's a beautiful day in May of 2026. First day we're supposed to hit 90 degrees, and that'll be very, that'll be very interesting. I mention that because I'm not trading. I've got my trading platform up. It's like, I don't know, 8:30, 9 o'clock in the morning, and there's uncertainty in my mind as to what I want to do. So whenever I have that feeling, I just walk away and have another cup of coffee. I'm still trading. The market is in my mind. I'm prepared to go in there and look at the screen and do my 15-second what's going on. And if there's something that needs to happen right then, I can go through my entry analysis of the situation and get a go, no go on a trade, and then I simply have to wait for the rule to indicate when to take the trade. It makes life very simple. But I guess, my whole process of talking about Forex trading is that it's simple, but this isn't about Forex being simple or the process of trading Forex being simple. It's about not trading and still be trading. When I was at dinner last night, we went to my granddaughter's first swimming lesson, and then Sue and I decided we'd go out to dinner and sit on the patio of a local restaurant and had a lovely time, glass of wine. It was really great. But I wasn't trading, but I was trading because my mind was on the markets, as it always is. I mean, if you own a house and you're on vacation, you're still thinking about the house. You're not worrying about it. It comes into your head because it's important. And as long as trading is something that's of interest to you, you enjoy the trading process. It's not just a way to make money. I will have you turn off the video immediately by saying, if you're not passionate about trading itself, then you should not be trading the Forex market. If you're just there to make money, you're not going to be a success. You should have a desire to make money, that's for sure. But that's not the reason that you trade. You should trade in a live market if it was only for $1 a day because you enjoyed it. If you were totally broke and you only had $1,000 to trade a mini account, would you do that? Knowing that you're not going to take that $1,000 to, if you're silly and do what a lot of these guys do and trade at 200 to 1, you might be able to take the grand and turn it to $4,000 or something like that on 200 to 1 leverage. And at some point, you're going to lose all your money. And you could say, well, that's okay because I only started with 1,000. So, I've still got that left. I'll just start over again. But that's not the point of trading. Not the way I look at it. If someone is going to work with me, they're going to have to convince me that they have a passion for trading and they want to use that passion to replace their job income or at least significantly impact that job income. Significantly impact it would be 10% return against what your job income is. So for example, if your job income is $63,000 a year, which is the average income at this particular time in the United States, then $6,000 a year would be a significant impact on that job income, because your job boss is not going to give you $6,000 bonus. I mean, unless you're in sales or something like that, but for 99% of the W-2 workers, that isn't the case. And so if your boss said, I'm going to give you a 10% raise, or I'm going to give you a 10% bonus, you would go out to dinner and celebrate and have a great time. That would significantly impact your life. So let's look in terms of relativeness to our job income. First of all, so you're making $30,000 a year, do you really expect to replace your job income if you're only making $30,000 a year? You could only expect to do that if you were full 5 years of experience, had plenty of money, and were willing to risk it all and trade at 200 or 500 to 1. If you're trading in the United States, you're clipped right there, because you still need 5% of the cash value of the currency in order to trade. So if you want to trade one full lot and the price is 1.0000, that's $100,000. The cash price is $100,000. You need $5,000 just to trade the account. And if you lose $15, you can't trade a full lot. You can make an extensive amount of money. You could make a 300% return against your risk if you're doing all kinds of advanced things. And you might be able to do that 300% in 3 or 4 months. But those folks that can do that are anomalies. It's so easy to be unreasonable in our thinking about what we want to get out of Forex, because it's so dynamic. Look, 90% of the traders lose 90% of their money. What does that mean? Well, other than your bad education, it means that for the 10% who know what they're doing, they can pick up that 90% of the money that's out there floating around. Your earnings are unlimited. They're only limited by the bank size that you have. And so if you have the wrong idea about what you're going to be capable of making, you're going to feel that it's necessary to make 4 trades a day, 5 days a week, and do all kinds of research and all this other kind of stuff. At some point, you're going to fail. There's no way you can learn the fundamental analysis the same way that a bank trader, an institutional trader, can learn it with the 100 people that are on the floor. And they're all studying the different things. And they're all studying. You go to the dollar desk, you go to the Swissy desk, you go to the whatever desk. The majors all have their desk. That's all they focus on. And there might be 4 or 10 traders that are trading that particular currency. They don't lack for any resources to do anything. You can't beat the institutional traders. So why would you waste your time studying fundamentals like a lot of these former bank traders that are coming down to teach you as a retail trader? A bank trader is the last person you want to listen to about taking Forex trading, or any kind of trading lessons from. It's our eagerness to take a market that has such tremendous potential and project ourselves into the fact that we want to make. Well, who cares? Well, I'd like to be able to swim in the Olympics. Well, okay, great. I don't have the physical ability to do that. I want to play Major League Ball. Great. I want to be rich. Well, great. It's the same thing. Wanting something and actually having the capability to do that are totally different. The only thing that you need to make as much money as you want to make in the currency market is that you have to know what you're doing, and you do that by having good risk management, and you have to have a large enough bank with an understanding of what a reasonable percentage return against that risk is for the skill level that you have. I've just told you that in a fast track environment, you should have the skills and the knowledge to be, the goal is to be 20% trader. against risk, 20% return against your risk in a year, not a fucking month. Like I just had one of my students say, oh, he wanted to make 20% a month. You told me I could make 20% a month. No, asshole, I didn't tell you you could make 20% a month. I said you could make maybe 20% a year, that you had the skills to do that. And the guy turns around and he gets the equivalent during the course, the equivalent of a 53% return against risk, and he's whining because he's not making 100% risk on track to make 100% risk in a month. That's just craziness. And yet we all want and project our abilities. All of that I'm talking about would appear not to have anything to do with the premise of the video, which is not trading is trading, but it has everything to do with that. Because if you have this compulsion to trade, you're gambling, you're not trading. If all you want to do is make money, then you're gambling, you're not trading. You can make as much money as you want by trading under well-defined risk management rules coupled with well-defined action rules for the actual trading. That's why I have 3 rules in my that I teach. It's called the life cycle of a currency position, because that's what we're trying to study. I was a software engineer for 33 years. We used something called the software development life cycle, the SDLC, to solve complicated problems so we could write programmatic solutions to very complicated problems. I just took a rip against that and created the life cycle of a currency position, which has 3 phases: entry analysis, position management, and exit methodology. Each one of those phases constitutes a rule, because it's a problem. You're trying to solve the currency market problem. That's what everybody thinks that they're trying to solve, and that's the courses that they take, and that's their expectation. I'm going to learn how to solve trading, and therefore I can make all this money. But you can't, because you can't solve that problem because it's too complex. The currency market is the most complex market that's out there, so you're not going to solve that. You have to break it down into smaller pieces that are solvable. I can solve entry analysis, I can solve position management, and I can solve exit methodology. 3 rules. That's all that it takes. That's what the Fast Track course teaches. But before you get into learning the solutions to those 3 problems, you have to understand what's possible to make under reasonable conditions. And you have to look at some really basic math that shows you that you can prove out what is possible. I've got the basic math to show the basic equation on trading 1 time a day with good risk management, that you could get 80% return against your risk. If you were really risk management capable, and you had some other characteristics that the math shows that you would need to have. And they're not unreasonable characteristics. It's setting your expectations incorrectly, and that's what's making you overtrade. And that's the killer for everything. Overtrading. Doing what I call anticipatory trades. Oh, I think there's a trade that looks really good. In 10 pips, it gets here. Man, it's just going to keep right on going. So I'll take the trade right now, and I'll make that extra 10 pips. No, it'll go 20 pips against you before it goes there, and then it'll stop you out at a 20 loss, and you're wondering why the theory doesn't work. You don't need to trade every day. There's 200 trading, there's 260 or something like that, but just for shits and grins, we call it 200, make it simple. And when we're actually doing the hardcore math at the end of the Fast Track program, we figure out your ratios based on only trading 100 days a year. What will you be at? Based on what you're doing right now with the 4 metrics that we study, you can use those to project out annualized returns. Simple returns, not compounded. I don't teach compounding. I think that's the kiss of death for beginner or even intermediate traders. Wouldn't it be something to trade 100 times a year, 1 time a day, and make a decent percentage against your bank, I'm not your bank, but your job income? So if you could do that and make $2,000 against your $10,000 bank, that's 20% return, right? Which is the goal of the fast track, to give you the skills to do that. And most folks that come out of that are 35 to like 55 or something like that percent return. Does that mean that they're going to make that at the end of the year? I don't know. They have the skills, they have the information. It's like driving a car. You get the information to drive the car safely, but you could get in a car wreck if you blow the stop sign, yeah. And those decisions, those risk decisions, are totally up to you. You don't want to set a stop, or you want to shoot for the moon, and you want to hold your trade, or you want to do anticipatory trades, or all that other crap that you're prone to. That's your decision. Fast track teaches you what not to do. That's the first thing that we teach you. Don't do this. And the reason you don't do this is because here's these 4 metrics that if you can plug the numbers in correctly to these 4 metrics, you can get a 20% return. Skill level. So take your $10,000 and make a couple of grand a year. And that's significant against your job income, right? If you're making $30,000 a year and you make $2,000, or if you're making $40,000 a year, which is not much money in the United States, if you could come on to another $2,000, that would be great. So if you just had a $10,000 account, you're making $40,000 a year, and you can make $2,000, let alone go into the 40 or 60% return against risk that the skill level will take you to. I mean, what more could you want? Oh, you want it all, you want it now, and you think if you double up on your trading and you're doing anticipatory trades and you start trading at 200 to 1, you're going to be great, and you're going to go in with $30,000 account and you're going to just kill it. No, the only thing you're going to kill is yourself, and you're going to kill your account. Your account will go first, and then your ego and everything else will get crushed. And now you'll be revenge trading, even if you have enough money to refund your account, which you put a $30,000 account in and you lose it, you're not going to come back from that, Bob. I'll tell you that right now. You're not going to come back from a 20% or a 30% loss. You have a 20% loss against your account. You got a 33 or a 38% gain that you have to make on the remaining balance just to break even. If you can't make 20% in the first place, how are you going to make 38 just to come even? You're not. You have to be really, 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 really careful. And part of the risk management is if Sun Tzu said every battle is won or lost before it's ever fought. You know, if you don't fight the battle, you can't lose it. So that's what I'm doing right now. I don't know what I should be doing with the price action. It's just going crazy because of the political climate that's going on. Now they're talking about the possibility of raising interest rates. Decision isn't coming out until December, and they're already farting around thinking they need to raise the interest rates instead of the previous drop that they did. Nobody knows what's going on. But what the institutional traders know is they've got to continue to provide liquidity for their clients to sell their currency, to buy another country's currency so they can buy that country's products, to make their own products so that they can then turn around and sell for more money and make up the spread difference. That's what international economy is all about. Economic exchange. You can't trade every day like the institutional traders because you're not an institutional trader. So have fun, have a cup of coffee, and relax and have a good time trading. If you're passionate about trading and you really would like to know how to significantly impact your job income just to get started, let alone replace that job income, send me an email so we can get a conversation going. I'm not going to try to sell you the course because I don't care. I don't have time to teach everybody. It's not an online course where you just sign up and you're taking it with 500 other people. Here's $500 and dial in. I work with the person personally. That's what the course is. There's a course manual, but I work with you because that's the educational process. You can't learn this stuff from a book or an online course. You cannot. You might be able to get started, but you won't be able to get to the point where you are confident in risking large sums of money to get half of your yearly job income, and hopefully with the thought of replacing that job income. but you have to be reasonable. So I'm proving that by sitting here, not trading, but I am trading. So again, if you'd like more information about this, send me an email. I'd be happy to chat with you, as long as I'm not busy trading or too busy having a good time having my coffee. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.